Your financial life can be completely seized without warning. Not filing federal income taxes for years creates colossal problems. Many people face this due to stress or hardship. The Internal Revenue Service, known as the IRS, does not forget unfiled returns. They possess powerful tools to collect what they believe you owe. First off, there are immediate accumulating penalties and interest. The failure to file penalty is substantial. It begins at 5% of unpaid taxes each month your return is late. This penalty maxes out at 25% of your total unpaid tax liability. Think about it. If you owe $10,000, that's up to $2,500 extra simply for not filing on time. This is only one penalty. Then there is the failure to pay penalty. This is a separate additional charge. It is 0.5% of unpaid taxes each month. The tax remains unpaid. This one also caps at 25% of the unpaid tax amount. So you could easily face a 50% increase of your original tax bill just in combined penalties. It is a harsh reality for countless taxpayers. On top of these two penalties, the IRS always charges interest. This interest applies to any unpaid tax and to the penalties themselves. The standard interest rate is the federal short-term rate plus 3%. This rate changes every quarter. For example, if the federal short-term rate is currently 4%, then the IRS interest rate would be 7% annually. 7% on a growing balance truly adds up fast over several years. Imagine owing $20,000 for 3 separate tax years. Each year will accumulate its own penalties and interest charges. The total due can quickly become staggering. One crucial detail about not filing is the statute of limitations. For filed returns, the IRS generally has 3 years from the date you filed or 2 years from the date you paid the tax, whichever is later, to audit or assess additional tax. However, if you do not file a return, there is no statute of limitations. The IRS can pursue you for unfiled taxes from any year, no matter how old. This means a tax bill from 20 years ago could suddenly appear. It becomes a permanent financial shadow. The IRS will eventually catch up. They receive wage and income information from all your employers and financial institutions. These are forms like W-2 and 1099. They already know much of what you earned. If they have this income data and you have not filed your own return, they may prepare a substitute for return, often called an SFR. This is a basic tax return the IRS creates on your behalf. The big problem with an SFR is that it usually does not include your valuable deductions credits or exemptions. This nearly always results in a much higher tax liability than what you would have owed if you had simply filed your own accurate return. They calculate based only on your gross income. You miss out on potential child tax credits, mortgage interest deductions, or student loan interest deductions. This inflates the bill even more. Once an SFR is filed, the IRS will send you a notice of deficiency known as a 90-day letter. This letter gives you 90 days to respond, either by filing your own correct return or petitioning the United States Tax Court. Ignoring this notice means the tax assessment becomes final and legally binding. At this point, the IRS moves into more aggressive collection actions. These actions can be incredibly disruptive and damaging to your life. One common tactic is a federal tax lien. This is a formal legal claim against all your current and future property. This includes real estate vehicles and financial assets. A lien makes it extremely difficult to sell property or obtain a new loan. It remains on your credit report for years, damaging your financial reputation. Getting a new mortgage or refinancing becomes almost impossible with an active federal tax lien. Another severe collection action is a tax levy. A levy legally allows the IRS to seize your property or money. This means they can garnish your wages directly from your paycheck. They can levy your bank accounts, taking funds straight from your savings and checking accounts without further court order. They can even seize and sell personal property like cars or boats. The IRS must typically send a final notice of intent to levy at least 30 days before taking these actions. If you are not checking your mail or if your address is outdated, you might miss these critical warnings. Many people have their bank accounts unexpectedly emptied without prior personal notification, just a letter sent to their last known address. This can be devastating for families. Passport denial or full revocation is another modern consequence. The Fixing America's Surface Transportation Act, known as the FAST Act of 2015, permits the IRS to certify seriously delinquent tax debts to the State Department. If your certified tax debt exceeds $59,000, adjusted for inflation, the State Department can deny your passport application or revoke your existing passport. Imagine being unable to travel for crucial work, family emergencies, or vacations simply because of unpaid taxes. This is a very real threat for many high dollar tax debtors. The exact threshold amount changes periodically. The most extreme consequence is criminal prosecution. While rare, it is a very real possibility for individuals who willfully fail to file or file fraudulent returns for multiple years. The IRS Criminal Investigations CI division focuses on these serious cases. Penalties for willful failure to file can include up to 1 year in prison and a fine of up to $25,000 for each year not filed. For actual tax evasion, the stakes are significantly higher, with up to 5 years in prison and a fine of up to $100,000 for each offense. They focus intently on intent. If you simply forgot or were overwhelmed, that is one thing. If you deliberately avoided taxes with criminal intent, that is different. These criminal cases are usually reserved for individuals with high incomes and undeniable evidence of deliberate evasion. The frightening possibility still remains a chilling deterrent. So, what do you do if you haven't filed for many years? The first and most important step is to take immediate action. Do not bury your head in the sand. Gather all relevant financial records for all unfiled years. This includes W 2 forms, 1099 forms for independent contractor income bank statements, investment statements, and any records of deductions or credits you might be eligible for. The IRS strongly encourages filing all delinquent returns, even if you cannot pay the full tax amount due. This immediately stops the failure to file penalty from growing. Many people find it incredibly overwhelming to go back 5 or even 10 years. It can be a very stressful and daunting process. It is highly recommended to seek professional assistance. Enrolled agents, certified public accountants, or experienced tax attorneys specialize in these complex situations. They can help you reconstruct your income and expenses, obtain necessary transcripts directly from the IRS, and prepare and file all your delinquent returns. They can also represent you directly before the IRS. Relieving direct communication burden, hiring a qualified professional can significantly increase your chances of achieving a better outcome, like penalty abatement or a more favorable payment plan. Once your delinquent returns are filed, you will likely owe a significant amount of tax penalties and interest. But fortunately, there are relief options. The first time penalty abatement program might allow you to get certain penalties waived for one tax period if you have maintained a clean compliance history for the past 3 years. This is a common and helpful form of relief. If you are facing severe financial hardship, an offer in compromise or OIC might be a viable option. An OIC allows eligible taxpayers to resolve their tax liability with the IRS for a substantially lower amount than what they originally owe. It is a very complex process, and the IRS thoroughly evaluates your ability to pay your current income expenses and total asset equity. They want to see clear proof that you truly cannot pay the full amount. Another common option is an installment agreement. This valuable option allows you to make manageable monthly payments for up to 72 months, typically 6 years. It is generally a simpler process than an OIC. The IRS will usually agree to an installment agreement if you owe less than $50,000 for your combined tax penalties and interest. You will still accrue interest and some penalties during the installment agreement period, but it does effectively stop the more aggressive collection actions. If you are married and your spouse was solely responsible for unfiled taxes or errors on a joint return, innocent spouse relief might apply. This crucial relief can effectively relieve you from joint tax liability. The absolute key message here is proactive and consistent engagement. The IRS prefers to work with taxpayers who are actively trying to resolve their tax issues. Ignoring notices or hoping the problem will miraculously disappear will only make things dramatically worse. The longer you wait, the more penalties will accrue, the more interest will accumulate, and the more difficult it becomes to reconstruct your vital records. It also significantly increases the likelihood of the IRS taking far more severe enforcement actions. Many thousands of people successfully resolve their back tax issues every year by being diligently proactive. Think about the profound long-term impact on your entire financial future. Unfiled taxes can severely prevent you from achieving a good credit score. It makes it much harder to buy a new home or car. It can even negatively affect your ability to secure certain types of jobs, especially those requiring security clearances or handling substantial finances. The immense emotional toll of having this weighty burden hanging over your head is incredibly significant. The stress and constant fear can be utterly overwhelming, but there is a clear way out. It involves bravely facing the problem head on and working through it methodically. Every new tax year presents a fresh opportunity to achieve compliance. Even if you have not filed for 20 long years, you can certainly start today. The IRS often focuses their enforcement efforts on the most recent 6 years of unfiled returns for practical reasons, but again, there is no statutory limitation period for truly unfiled returns. They are simply trying to efficiently manage their massive workload. Filing past returns, even if you cannot immediately pay, gives you immense peace of mind and importantly stops those crippling penalties from continuing to grow. It also places you in a much stronger position to negotiate fair payment terms. Consider the severe ripple effect on your entire family. A sudden bank levy could freeze critical funds needed for rent or essential groceries. A wage garnishment could severely reduce your household income to an unsustainable level. These are not just minor inconveniences, they are potentially life altering and financially devastating events. The IRS sends millions of official notices each year. They operate highly automated systems specifically designed to flag unfiled returns and any data discrepancies. It is truly not a question of if they will find you, but rather when. Their data matching capabilities are incredibly sophisticated and constantly improving. Every single financial transaction leaves a distinct digital trail that can be easily traced. The penalties and interest charges are specifically designed to be a powerful deterrent. They are designed to strongly incentivize tax compliance, and indeed they absolutely work. The numbers clearly show that late filers owe significantly more than just their original tax liability. For someone owing $25,000 for 3 separate years, this could easily translate into an additional $12,500 in penalties alone. Plus, the interest, which could be thousands more depending on the specific years involved. This is hard earned money that could have been thoughtfully used for retirement savings, education, or a new car. Instead, it unjustly goes to the government as a direct penalty for noncompliance. It is a truly scary thought, but bravely facing it is the only viable way to positively move forward. The IRS website is an extremely valuable resource, offering detailed information on how to obtain your wage and income transcripts for free. This crucial step can rapidly kickstart your entire process of reconstructing past year filings. You can readily request up to 10 years of wage and income transcripts and 15 years of tax account transcripts. These transcripts are often the foundational building blocks for preparing delinquent tax returns, especially when original documentation is unavailable. Do not wait for the much dreaded knock on the door or the alarming final letter in the mail. Take resolute control of your financial destiny by urgently addressing unfiled taxes now. The earlier you act, the better your available options will undeniably be, and the less you will ultimately owe. It is a long and challenging journey, but an entirely achievable one. Remember that every single day you delay only adds to the accumulating burden of penalties and interest. One day, it might just become far too much to effectively handle without significant professional intervention and immense unavoidable stress.